We've got the CMD and CEO, Anuj Khanna Sohum, who's now joining in to talk a little bit about the trend in digital ad spends and the e-commerce boom. Thank you so much for taking time out. Now, we have seen the leading digital ad tech player in India, which is your company. Tell us a little bit about the interesting trends that you're seeing across some of the top customers.
Thank you for having me on your show. The digital economy overall is basically growing much faster than the traditional sectors that we have all been talking about overall when we look at the economy. Thankfully, we're in the right spot there, and particularly the focus on mobile and smartphone-based consumption in the consumers is actually increasing steadily and in a healthy, predictable fashion. So when we look at the consumers using their smartphones for various lifestyle consumption services, be it e-commerce, whether it's travel or transport or entertainment, OTT and gaming, or even fintech or financial services, there is a steady increase in the comfort with which people who are smartphone users are transacting through that with these various industry verticals. Now, Affle is right in the center of this as a consumer intelligence platform, enabling these conversions based on our business model. So we can actually see the trend quite clearly. Having said that, I mean, while the growth has been pretty steady, I think when we look at this particular quarter, the festive season, the October, November, December, has been relatively muted. And I think the consumers are not transacting quite as much as one would have thought they would in this particular quarter. And I think that's largely because of the macro factors that the consumers are just being a little more conscious, maybe not spending as much. Let's see how the holiday season goes in December when the school holidays and Christmas, New Year break happens. So we are watchful, we are waiting. But last year, I think the Q3 was much more stronger from a consumption perspective on the digital economy side.
So, the consumer platform accounted for almost 97% of revenue in the first half, and the enterprise platform the remaining, of course. How do you see the segmental revenue mix evolving over the next few years?
Well, for us, the consumer platform business is our biggest business segment. Within that, over 90% of our revenue comes from when consumers actually do deep funnel conversions with our advertisers across these industry verticals. Now, we expect that to be the fastest growing segment. Even in H1, we grew our CPCU, the cost per converted user business, over 45% versus the same period last year. Now, in H2, we expect that compared to H1, we will do an incrementally better performance. But last year in H2, the growth trends due to the festive season were much stronger. But even then, if we look at the serialized, H1 to H2, I would expect that the contribution of the consumer platform business would be still significantly more, and the growth rate would be much better than the enterprise business. But from a H1 to H2 perspective, we hope to deliver better financial performance on a relative basis. But when we compare year on year, last year, the festive season was a blockbuster. This year, the consumers have been a bit more cautious, and we are seeing not as many conversions in terms of the peak that we usually see in Q3. That peak is, let's say, more balanced in terms of Q3 and Q4. So H2 should still be a positive growth for the consumer platform business. But just wanted to say that we could have done much better had the economy been in a stronger position.
Okay. So how do you address the issues related to ad fraud and consumer privacy to ensure that it does not impact your business?
Right. So if you look at our business, we are really focused more than, I would say, almost 90% plus of our business is focused on emerging markets. India constitutes about 50% of our revenue, and another 40% of our revenue comes from other emerging markets. So you see like almost 90+% is emerging markets like Southeast Asia, Middle East Africa, and now we're increasingly also testing our capabilities in markets like LATAM. Now, when you look at these markets, there is no government-based regulation in these markets. But our company was fundamentally a Singapore headquartered company previously, where the Personal Data Protection Act precedes GDPR, which came in Europe last year. And in the US market, we will actually see the regulation coming in Jan 2020. So our company preemptively is ready because we know the regulations have come in the developed geos, even though developed geos is not our focus.
Okay. Seem to have snapped that link a little bit. We'll just be reconnecting with the management of Affle India. But in the meantime, Let's pull up some of the individual buzzers as well in today's trading session. I just want to flag off what BPCL is up to. Remember, we got you that ET Now news break just last evening that they are likely to monetize their investments in IGL as well as Petronet LNG and Oil India. That's a stock which is just about cooled its heels at around the 500 mark. You've also got Z Entertainment, which did see the block deal culminate. The likes of GIC, even BlackRock, HSBC Global, they were among the key stake buyers, and the stock, after getting off on a muted foot, has now picked up steam, so quoting around the 350 mark in trade. And then there's Reliance Industries, just 13 rupees shy of the 10 lakh crore market cap. So keep watching out for that stock. And IT as well, just a quick check-in because of Goldman Sachs' report. They've downgraded a whole host of large as well as mid-caps, Emphasis, TCS, Wipro as well. Some of these stocks continue to remain in the limelight, and all of which are looking awfully tempered in today's trading session. But just let's connect right back then with the management of Affle India, Anuj Khanna. Anuj, apologies for that. Let's get right back to the discussion and talk about projection going forward. What kind of revenue as well as profit growth are you seeing over the next 2 to 3 years, underpinned by the strong macros? We've got the rising smartphone sales. Despite the slowdown that we've spoken about, smartphone sales have been absolutely undeterred. There's fast data speeds, a very young demographic as well that we're working with in India.
Right. So, look, I think all the points are well covered in what you said, but I think the key message here is that the consumers are transacting more on smartphone devices, and the average value of these transactions are also going up. So when I look at these macro trends across emerging markets, so India, Southeast Asia, Middle East, Africa, or even LATAM increasingly, we're seeing that, there should be a clear, predictable path of growing this business and the industry at large at about 25% revenue growth in terms of CAGR terms. If we look at not just 2 to 3 years, I would even say look at a 2025, like a 5-year window, and a 25% revenue growth in terms of CAGR terms is sensible. It's the right way to model this segment. But in terms of any particular short-term guidances, like I said, there will be factors related to how consumers are feeling at a particular time. Our business is directly linked to consumer sentiment, consumer conversions, and consumer data. So we are not completely immune, but I think in terms of the digital ecosystem, it's a large growth trend which will, it's going to stay with us for the next 5 years.
Areas that you're looking to expand ad tech into, what is the potential to tap the online travel, fintech, BFSI segment?
So we are already serving these segments, and we are working with most of the large players in these segments. But we are getting more deeper into these verticals. So if you look at the results that we announced, we talked about the 4 V's strategy of Affle, where we're talking about greater focus on video, voice, vernacular, as well as verticalization. So the 4th V, verticalization, is about serving these industry verticals in a deeper way, looking at deeper data integrations with these customers and giving them, deeper funnel conversions and going more broad-based in terms of not just new user acquisitions, but also repeat user conversions on smartphones for these customers. And the most exciting part would be, when omni-channel appears as a real possibility, where the consumers can transact with these channels both online through their smartphones, but also their smartphones are always carried even when you enter a bank in a physical location or you go to a retail storefront. So you can do online to offline integration. So we are ready with the right technologies, the patents, the strategy. So over the next 5 years, we hope to deliver a lot more new innovations and capabilities as we become more from an online channel to an omni-channel approach, both online and offline for these verticals.
Thank you for sharing with us some of the trends that you're seeing, the digital ad spends, how they're growing, and what the roadmap really is for your growth.